Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, every RIA at Schwab should know this Solo 401k trick. Hint, $70,000 Mega Backdoor Roth. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, if you've got questions or topics on this topic or even unrelated topics, please chat them over now so that we can be sure to get to them all. We'll dive into today's topic of every IRA at Schwab should know this Solo 401k trick. Hint, $70,000 Mega Backdoor Roth. So let's first lay the foundation with the Solo 401k eligibility rules. So in order to be eligible to set up a Solo 401k, you need to satisfy two requirements. The first requirement is that you must have self-employment income. That could be income as an independent contractor, such as a 1099 NEC, or income that you receive through a single member LLC, provided that it's reported ultimately on Schedule C of your 1040 as earned self-employment income. Otherwise, other scenarios would include someone whose business is taxed as an S Corp or a C Corp, where earned self-employment income would be the W-2 wages that you receive from your business that's taxed as an S Corp or a C Corp. Lastly, if your business is taxed as a partnership, earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. The other piece of the eligibility criteria is that you cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. This means that your spouse can participate if your spouse is also working in the same business and reporting their own earned self-employment income, such as their own Schedule C or their own W-2 from the self-employed business. Ultimately, this will be ideal for those that are self-employed consultants, realtors, freelancers, and other small business owners. So that lays the foundation in terms of the Solo 401k eligibility. Now let's talk about the Mega Backdoor Roth. So the Mega Backdoor Roth is a strategy that one can use to maximize contributions that end up in a Roth account. For example, for 2025, with the Mega Backdoor Roth, one could contribute up to $70,000 or even more if they're age 50 or older, where those funds will end up either in a Roth 401k or a Roth IRA. And just like any Roth account, the individual will then have the potential for tax-free growth. In many ways, this is advantageous, more advantageous to a Roth IRA, not only because it has such higher contribution limits, for example, 10 times the standard Roth IRA contribution limits, but also because there's no income limits. So with a Roth IRA, if the individual makes too much money, they're not going to be eligible to make Roth IRA contribution limits. Whereas with the Solo 401k, there are no such income limits. So regardless of how much income the self-employed individual makes, they'll still be able to make these Mega Backdoor Roth contributions. Now, Mega Backdoor Roth is really a marketing term or a term that's just used colloquially online or on social media. Really, what it refers to is a two-step process where the individual will first make what's referred to as a voluntary after-tax contribution, which is a different type of contribution. So it's distinct and different from your standard employee contributions or employer contributions. So you need to have a Solo 401k plan that allows for, number one, voluntary after-tax contributions, and then number two, allows for those voluntary after-tax solo 401k funds to be transferred out of the after-tax solo 401k account, either to a Roth solo 401k or a Roth IRA. So this is the key to unlock this for those advisors that are custodying at Schwab. They need to get a plan. The client needs to get a plan that allows for the Mega Backdoor Roth contributions, specifically a plan that allows for both voluntary after-tax contributions and then Roth conversions. So what's great is that if you work with a provider like my Solo 401k Financial, the client can obtain the documents from my Solo 401k Financial from us, but the accounts can still be at Schwab Institutional. So if the advisor's custodying the accounts at Schwab, they can have the plan, the client can have the plan from us, but then have the accounts at Schwab. So then the advisor can work with the client to help grow that account, where again, they'll have the potential for tax-free growth. So in this way, my Solo 401k Financial is very complementary to advisors because we're not providing the accounts. We're totally neutral as far as where the accounts are at. So if the advisor is custodying at Schwab, if the RIA custodies at Schwab, the client can have the plan documents from us, but have their accounts at Schwab. So we're not providing investment advice. We're neutral as far as where the accounts are at, but we provide the plan that unlocks this ability to make Mega Backdoor Roth Solo 401k contributions for the client. So the key again is having the plan that allows for the after-tax contributions and then allows for the transfer of those voluntary after-tax funds either to a Roth Solo 401k or a Roth IRA. Now, with that stated, that's really the basics. That's the minimum, having those plan documents. It's also going to make sense to work with a provider like my Solo 401k Financial that has deep experience in helping thousands of customers through the Mega Backdoor Roth Solo 401k process, because there are technical steps that need to be followed. We've alluded to, for example, the fact that you first need to deposit the voluntary after-tax funds into a separate voluntary after-tax account before the funds are transferred either to a Roth Solo 401k or a Roth IRA. So it's a two-step process. So you want to work with a provider like us that has experience in guiding clients through that two-step process. In addition, we field questions every day from clients and or their advisors in terms of educating them on the contribution limits, the contribution deadlines, the contribution rules. Because, for example, some clients will want to 100% maximize their contributions to the Roth account. In other words, make all the contributions as after-tax contributions and then transfer to the Roth account. Whereas others will want to take a blended approach where they may want to first maximize the pre-tax contributions and then make whatever's left as a Mega Backdoor Roth contribution. So it's going to also make sense to work with a provider like us that's used to fielding those types of contribution questions. And then lastly, from a compliance piece, even though the first step, when you make that after-tax contribution, that doesn't need to be reported on the personal tax return or the business tax return. It doesn't need to be reported on the W-2. For example, if the business is taxed as an S Corp or a C Corp. The second step, when the funds are transferred to either a Roth Solo 401k or a Roth IRA, that does need to be reported on the Form 1099-R. And we handle that as an optional free service for our customers. The clients or their advisors just simply need to complete our online form to provide us the information we need to prepare the 1099-R. And then we'll add the plan to the queue to prepare it for no additional charge. So it's an optional free service. So now it's also good to understand the role of Schwab. So Schwab does offer their own solo 401k, but it's a basic plan. It's a vanilla plan. It doesn't allow, for example, for the Mega Backdoor Roth contributions. It doesn't allow for other features like the ability to take a solo 401k loan. It doesn't qualify for the $1,500 in solo 401k tax credits. In other words, the features that our plan, the plan that's offered by my Solo 401k Financial, does offer. right? Of course, it is eligible for the Mega Backdoor Roth contributions. It does allow for solo 401k loans. It does make the self-employed business eligible to claim $1,500 in solo 401k tax credits. So at the same time, while Schwab's basic plan doesn't allow for any of those features, Schwab will still open accounts for third-party plans that do. So the accounts can be at Schwab, but the plan documents can be provided by a third party, namely my solo 401k financial. And if the advisor custodies at Schwab, it can be on Schwab's institutional platform. So now the advisor can help manage the account from an investment perspective. And Schwab most certainly does totally support the Mega Backdoor Roth structure. For example, they'll support multiple sub accounts. So you can go through that two-step process of making those Mega Backdoor Roth solo 401k contributions. So in terms of the implementation steps with Schwab and my solo 401k financial, step one, of course, is always going to be verify eligibility. That's why we laid the foundation in terms of those eligibility criteria of being self-employed, meaning reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. Then the plan needs to be established with a provider like my solo 401k financial, whose plan documents support the Mega Backdoor Roth solo 401k contributions. Then the accounts need to be established, which again can be on Schwab's institutional platform. And we will pre-fill that paperwork to make it easy for the client and the advisor. Now, it is important that those accounts that are established at Schwab are opened under the EIN number that's obtained for the solo 401k. And as part of the onboarding process, we do obtain that EIN number specific to the plan. So this is different and distinct from the EIN number that the individual may have for their self-employed business. Like, for example, if their business is taxed as an S corporation, they most likely will have an EIN number for that S corporation. So this will be a different EIN number that's specific to the 401k. Once the accounts are established, now those accounts can be funded. Of course, they can be funded by rolling money over, for example, from a former employer plan or a non-Roth IRA. And we're very hands-on in helping with the rollover process. But then also they can be funded by making contributions. So this could be 100% Mega Backdoor Roth contributions, or as I mentioned, some clients will want to take a blended approach where they first will maybe maximize the pre-tax contributions and then make the difference as Mega Backdoor Roth contributions, meaning as voluntary after-tax contributions. Now, when you're making those Mega Backdoor Roth contributions, it's important to now go into the remaining steps of moving the after-tax funds over to the Roth account. So now they can grow with tax-free growth potential. So it's that two-step process of first going to the after-tax, then moving to the Roth. And then you want to let us know about that after-tax to Roth transfer so we can capture the information that's needed for the 1099-R. So even though the contribution is not reportable, the subsequent transfer from the after-tax solo 401k account either to a Roth solo 401k or a Roth IRA is reportable in a 1099-R. We have forms on our website that customers or their advisors can submit 24/7. You can access them easily at mysolo401k.net/forms. And then again, as I mentioned, a bonus of setting up the plan with my solo 401k is that it'll make the self-employed business eligible for $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. And those tax credits are not only available to new plans, but even pre-existing plans. So some clients or their advisors may have previously set up a basic plan at Schwab, and now they're looking to upgrade the plan to my solo 401k to be able to maybe make Mega Backdoor Roth contributions, or maybe now they need to be filing the 5500EZ, which we handle that as an optional free service for our customers. So even if they're upgrading a basic plan to our plan, the business will still be eligible for those $1,500 in solo 401k tax credits. So that's going to more than cover our fees for the first 7 years, because we charge $650 as an initial fee, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So here's a quick example just to illustrate. Let's assume that you have a self-employed individual whose age is 45 years. They earn $250,000. So this individual may decide to skip making employee contributions, skip making employer contributions, and just make a pure 100% voluntary after-tax contribution of $70,000. This is for 2025. They then transfer those voluntary after-tax solo 401k funds either to a Roth solo 401k or a Roth IRA, where they'll have that potential for tax-free growth. The key considerations are, it starts with the documents, making sure you have the documents. The client has the documents that support the Mega Backdoor Roth solo 401k contributions, converting those after-tax funds quickly to limit the taxable earnings. So under the rules, those voluntary after-tax solo 401k funds do need to be deposited into a separate after-tax account, but then they can be transferred immediately over to the Roth account so that they can start to grow with that tax-free growth potential. Because if those earnings were to have accumulated inside the after-tax account, the earnings would be taxable at the time of the conversion, issuing the 1099-R for the conversions. And again, we handle that as an optional free service. Customers or their advisors just have to give us the information we need using the online forms in a timely fashion, and then we'll add their plan to the queue to prepare the 1099-R. More broadly, once the value of the plan exceeds $250,000, and that includes the value of any defined benefit plan that might be sponsored by the self-employed business or any related business, once the total value exceeds $250,000, there is an informational filing requirement. The name of that informational filing is referred to as a 5500 EZ. So for those clients or whose advisors let us know about the plan assets exceeding $250,000, once it exceeds and they let us know right away, or at least by the end of the year, then we will add their plan to the queue to prepare the 5500 EZ. And we'll do that as an optional free service. We'll handle that filing under the electronic system to make it easy for the client and their advisor. And then, of course, maintaining accurate records, letting your tax advisor know about any contributions that do need to be reported on the tax return, such as pre-tax contributions, so you can capture that benefit of reducing your taxable income now for the year for which you make that pre-tax solo 401k contribution. So mistakes and pitfalls just related to a lot of those key considerations, right? Not having the plan documents that allow for the Mega Backdoor Roth solo 401k contributions, delaying the transfer from the after-tax solo 401k account to either the Roth solo 401k or Roth IRA, so the funds can start to grow with that tax-free growth potential. Misclassifying contributions, exceeding contribution limits, right? Missing the 5500 EZ. Well, that takes us to the end of the slides that we wanted to share. Thank you so much for checking out today's session. I see that we've got questions that have been chatted up. Thank you so much for chatting those up. So we'll turn to those now. If there are other questions or topics you wish to discuss, please chat those over now so we could make sure to get to them all. All right, our first question from Tom. The question is regarding a solo 401k I started with you several years ago. I want my beneficiary designation form that was provided when I first created to correctly list my living trust as the beneficiary. However, the beneficiary designation form seems to assume beneficiaries are individuals as it asks for names, social security number, relation. How do I specify a living trust as the beneficiary using this form? Do I need to use a different form? So great question. Certainly the plan documents, the plan would accommodate designating a living trust as the beneficiary. Now, the individual will want to make sure that they work with their estate planning advisor to confirm that their specific living trust can serve as the beneficiary. And then also work with their estate planning advisor to list the living trust on the beneficiary election form. So individuals will just use that same form, but instead of listing a natural person in the name field, they'll just list the name of the living trust. And again, just working with the estate planning advisor to confirm that the living trust can be a beneficiary, and also how it should be listed on the beneficiary election form. Yes. So if for that purpose, you would still follow those same steps. And then, of course, retain the original in your files. Give copies to your tax advisors, to your estate planning advisor, and courtesy copy to us. We'll keep it in your file as well. A question on the 1,500 plan deduction you mentioned. Is this via IRS tax form 8881? Because this is a question I asked to my tax accountant, and his response: is there any reason we can't include form 8881 for a $500 tax credit for this year? No, that is not correct, and that's a common misconception, is conflating the startup cost credit with the auto enrollment credit. So there were two credits that were authorized by Congress under the Secure Act to encourage small businesses to set up 401k plans. One is the startup cost credit, which is not available, which is a solo 401k plan is not eligible to claim the startup cost credit. And your tax advisor is correct. In order to be eligible to claim the startup cost credit, you need to have non-highly compensated employees participating in the plan, which of course a solo 401k plan would not have such non-highly compensated employees, which is why it's not eligible to claim the credit. But there's another credit, which was made available under the Secure Act, which is the auto enrollment credit. So we'll have to pull up your plan just to make sure that your plan has that feature enabled, that the required notices were created, etc. And we'll shoot you an email after today's session just to let you know the status. But even if it doesn't have that feature enabled, it's still possible to upgrade an existing plan to include the feature and the notices, etc., so that the business would be eligible to claim those credits, which again is $500 per year for 3 consecutive years. And it's claimed using that form 8881. Great questions. Thank you so much for bringing it. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So we've got a few more minutes. Feel free to chat over questions. In the meantime, we invite you to our community. We have the largest community of solopreneurs, solo 401k owners, just other interested parties, over 30,000 members, which means we've got vibrant forums. There's a library of videos and webinars. So there's a ton of ways to learn and to share the knowledge. So please don't hesitate to join. You can join quickly and easily at my solo401k.net/my community. So you just hold the beneficiary election form in your records. You hold the official version of the beneficiary election form. But it's going to make sense to also share a copy with your estate planning advisors, your tax and legal advisors, and you can provide a courtesy copy to us as well, and we'll keep it in your file as well. All right. Looks like it takes us to the end of today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable. Your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. All right, take care, everyone. Thank you so much.